It's all doomsday out there when it comes to the housing market. So what should we do? Should we sell all of our real estate? Should we wait on buying a home? Should we stop investing in real estate altogether? The funny thing is, these same experts who are calling for doom and gloom have also been predicting a real estate market crash for the last 5 years. The bottom of the last housing market crash was in 2009. And real estate cycles usually last 7 to 10 years. So starting in around 2016, the experts have been saying that a market crash was imminent, which got me thinking, what if you would have listened to those experts? Why do I keep doing these air quotes? I don't like them. Anyway, what if you would have listened to these so-called experts? See, no air quotes there. And not bought a house 5 years ago because you were waiting for a market correction. Let's jump into our time machine, get the flux capacitor working, and go back in time to 2017, and let me show you the crazy impact that decision would have had on you, your family, and your net worth.
This is what makes time travel possible. I'll show you how it works.
This readout tells you where you're going, this one tells you where you are, this one tells you where you were. You input your destination time on this keypad.
Oh hey, it's 2017. I'm living in California and I love LA. Despacito is dominating the music charts. I can't play it for you here or I'll get a copyright strike on my YouTube channel, but you'll probably have the tune stuck in your head for the rest of the day now, just like I do. Tom Brady and the New England Patriots just completed the biggest comeback in Super Bowl history after being down by 25 points in the fourth quarter. The 45th President of the United States is inaugurated, and no sane person would ever think that a cloth mask could protect you against viruses. Oh wait, nothing has really changed there. Anyhow, the median home price in the country is $313,000, and you've heard rumblings that the housing market is due for a correction. So you decide to listen to the experts, rent, and wait it out. Let's fire up the DeLorean and head back to the future to 2022 to see what happens. That real estate market correction never came. The median home price is now over $428,000 or 37% higher than 2017. So the first thing you missed out on was over $115,000 in appreciation, but that's just the start of it. During those 5 years, assuming you put 20% down, you also paid down about $25,000 of your principal balance over the last 5 years instead of paying down your landlord's mortgage. But we're still not done. Your mortgage interest is typically tax deductible as well. So over that 5-year period, you saved about $16,000 in taxes. Add it all up, and buying a house 5 years ago made you $115K plus $25K plus $16K for a total of $156,000. And that's on a median priced home. If we're talking $500,000 home or $1 million home, or in many markets across the country where appreciation was way higher over the last 5 years, you would have made way more. It's no wonder that a typical homeowner's net worth is actually 40 times greater than a renter's. But Dima, the housing market is about to crash and all of that appreciation will be wiped out. Okay, keep calm and let's do the math on this together. If that house you bought 5 years ago is now worth over $428,000, the real estate market would have to go down over 63% to get back to that same level as 2017 when you include all of those other benefits that we discussed. And since 1963, that big of a drop has happened exactly 0 times. Plus, interest rates are much higher now or will be later, and so if you waited, your payments would be higher anyway. And so what was the right decision, you guys, in 2017 when the experts were saying the market would crash? You guessed it. It was to buy real estate. But I don't want you to think that I'm just always blanketly saying buy. Wait, is blanketly a word? Maybe. Anyway, I'm not always saying to blindly buy real estate. The question is, what should we do as freedom-loving entrepreneurs trying to make the best decisions for our families today in 2022? Is buying a house or an investment property still a good idea? Should we sell everything and just wait it out? Let me give you the very calculated, purposeful answer that I spent about $100,000 in law school tuition to learn. It depends. First and foremost, understand that it's nearly impossible to time the real estate market. So when people wait to buy, what usually happens is that they miss the bottom, buy when the market is on its way back up, and at that time the interest rates are usually higher also, so they get a double whammy and they're worse off than had they just bought initially. I'm also not naive to the indicators in the charts. The experts giving you these doomsday predictions right now are looking at a few specific charts and indicators to tell you that the housing market is in trouble. First of all, mortgage interest rates are the elephant in the room. They've risen sharply in the last few weeks, actually more than ever before, and they've pretty much doubled from around 3% to over 6% for a 30-year fixed mortgage. Now, the general rule of thumb is that for every 1% increase in mortgage rates, purchasing power decreases by about 10%. So we've lost about 30% of purchasing power, which is very significant and creates much less demand for real estate since most people who buy homes get financing. Next, the experts are looking at price reductions on current listings, which are definitely up, and they're saying that people are panicking. Now, although the chart seems to indicate that, I've been talking to the real estate agents on my team at Discover Properties, and here's what they have to say. Dima, listen, sellers went nuts and they're just coming back to where they should be pricing in the first place. For example, a seller would say, oh, check it out, the house next door sold for $500,000, I'm going to list mine for $550 or maybe even $600. Then, of course, the house doesn't sell because the price was way above where it should be, which was already very high last year, and then they reduce it to $500,000 where the neighbor sold and end up selling it in a day. You guys, does that sound like panic or desperation selling to you? No. Their new reduced price is still like 20% higher than last year. It's just lower than that even crazier price that they may have wanted. Based upon all of this, I know what you're thinking.
Dima, if you're so smart, tell me what's really going to happen.
The most likely scenario is a bit of a standoff between sellers and buyers. Now, this makes a lot of sense to me, and it's exactly what the charts actually show. There are more price reductions, but there isn't a flood of inventory, and prices have not come down, at least not yet. I'm not saying that they for sure won't come down. They might, a bit, but we're not looking at a 2008 scenario, and I know that for sure. Bottom line, what should we do? Look, guys, real estate is very local. Yes, there are a lot of national events and world events going on, but you have to look at what's going on locally in your area. Ultimately, this is the most important chart in real estate. Months supply of inventory. You can actually check out this chart, click on your metro area and see what's going on. For example, for me in the Dallas metro area, months supply currently sits at 7 weeks. I know the chart is called months supply and it shows data in weeks. I think Redfin is purposely trying to confuse us. Anyhow, this means that it would take 7 weeks or under 2 months to sell out of all of the available inventory in the DFW area. As a reference, anything under 3 months or 12 weeks is a heavy seller's market, meaning there are just not enough homes on the market to meet demand, which is what's been going on for a long time, and prices will go up. Anything between 3 months and 6 months is a healthy balanced market, and anything above 6 months is a buyer's market where prices will probably come down. Now look, guys, don't tell anyone my secret, but this is the chart that I always point to see what's going on with supply and demand, which is really what drives the real estate market. Now, I will admit that this chart is a little bit delayed because it's not like stocks that update instantaneously. It's usually about 1 to 2 months behind. But in any case, here's the bottom line. If you're buying a home to live in as your primary residence, my advice is always going to be the same and it'll never change. You can quote me on this. No new taxes for anyone making less than $400,000. Oh wait, wrong quote. That didn't work out so well with high inflation, rising gas prices, supply chain shortages, and more. I don't mean to laugh. Here's what I meant to say, you guys. Find a home you love, lock in a great interest rate, and enjoy your home. It's not a stock, it's not crypto. Live in the home and don't worry about the price. I bought my first home in 2004. The market crashed in 2007, and we finally sold that house in 2021 and it more than doubled in value. If you're buying an investment property, obviously you have to be a little more cautious and consider the cash flow, the rent projections in the area, and if it's a rental property, your profit margins if you're doing a fix and flip or new construction. I'll actually have a new real estate investment course coming out soon, so if you don't want to miss out, subscribe to the channel. Sorry, shameless plug. I've even heard some experts saying that you should sell all of your real estate. Guys, what a bunch of mumbo jumbo that is. Check it out. When you sell real estate, you have to pay real estate commission, fees, and taxes that typically total around 6 to 10% of the value. And as I said, there is no way to time the real estate market. So your chances of selling at the top and then buying at the bottom are, as one of my old football coaches used to say, slim, fat, and none. Slim's on vacation and fat's on a diet, which leaves, you guessed it, none. Anyway, stop listening to those experts when it comes to real estate. They don't know what's going on and they're just selling doom and gloom because, well, it sells. To me, real estate is the absolute best asset class to build generational wealth for you and your family. Get in the game and make it happen. But remember though, it's not enough to just want to buy real estate. You have to actually do it. And if you want to know how much money you need to buy $1 million home, or any priced home for that matter, check out this video where I break down the exact math, the various loan types and scenarios that you need to know about before making a real estate investment.